Hello, welcome to the live stream. Let me know if you can see and hear me and that everything looks good. It looks like Aaron's stream came over. Hello, welcome. Normally we have a donut, but we don't have a donut today. The donut shop, too many employees were sick and called out, and so they are not open. And I absolutely could have gone to a different donut shop when I found this out at 6:55 this morning. But it's rainy and I didn't want to leave the house, nor did I want to research a different donut shop. So we're no donut today, which is frankly fine. I have this, I only eat donuts on live streams rule so that they're tax deductible. And also so that I don't go get donuts all the time since I live very close to the donut shop. However, I did actually have a donut this week because I had a very packed week. I gave 3 talks. I had an interview. I had to take 2 tax exams this week. I just had a lot going on this week. So I decided that I deserved a donut because they do buy one, get one free, like the last half hour. So I decided I deserved a donut. So I technically already had my donut for this week. But it means I didn't get to share it with y'all. So it's no dough donuts. Yep. Have the donut shops gone bankrupt? No, the donut shop is just closed because they have a labor shortage. There is a huge COVID and RSV surge, so I'm not really surprised that they had a bunch of call-outs. Maybe there's just a very exciting festival in town. I don't think so, because it's not very exciting, do things other than go to work weather outside. But I assume everybody is sick, and that is why. But today's pre-show ad was for Progressive Insurance to protect what matters to you. Because they were like, oh, I see things about housing costs and mortgages. I should advertise to these people. My new blog, Not Having Dough and Not Eating Donuts. That's a great... Oh, I'm reading the chat, but I'm not putting it on the screen. Sorry. Not having dough and not eating donuts. That's excellent. Real quality right there. Can't I just eat the donut on the wall behind me? I could, but it's not a real donut, so it would not be very tasty because it's made of felt. But, we still have the donut here so that talking dough and looking at donuts is still a thing. I mean, we've now talked about donuts more than we even do in an average live stream, so. Don't get me started on insurance. Still mad at them. I mean, I'd love to get you started. Get going. Let's talk about it. This is technically a finance live stream. I have only done a little bit of prep for this week's stream, which we are going to talk about what is going on in the housing markets. And I kind of made the scale very large for myself, which is just the whole world's worth of housing markets, which obviously housing markets are extremely local. And so there's a lot of different ways in which countries are seeing the same problem, but in different ways based on their financing, their migration, all of that, and how it is affecting the cost of living and housing costs. And rental markets and housing markets are intertwined, but they aren't the same. And so what we are seeing in a lot of places is that home prices are dropping, but rental prices are going up. And we can talk a little bit about why that is, but we will not be able to cover every country or every city. There are plenty of ways in which the housing market in Miami, Florida is not the same as the housing market in Boone Falls, Idaho. And so, it isn't going to look the same everywhere, but I thought it would be interesting to talk about what's going on because what we're seeing in a lot of the data is that while interest rates are rising and while inflation is starting to slow because of central banks raising interest rates to bring down inflation, which is a huge issue everywhere, housing prices, especially rental prices, are not necessarily seeing the same kinds of drops. And there was massive speculation on the housing market during the pandemic, not that it's done, but during the height of the pandemic, And then there's some really big factors going on in some of the largest property markets in the world. So China, I've already done, I think, 2 live streams about what is going on in China's property market, because it's big, because China's property market accounts for a huge portion of household wealth. I think it's 73% of household wealth in China is tied up in housing. And the way that they build property in China is like just akin to like kind of a pyramid scheme, as far as the way the companies are structured. And they've now had defaults on 2 of the 3 major property developers in China. And essentially they were over leveraged is the easy way to explain it. And it is kind of a low-key Ponzi scheme, and regulations put in by Xi Jinping, the former leader of the CCP, called the 3 red lines, which were meant to kind of tamp down on what was sort of like this runaway leverage happening in the property market in China, didn't really have the effect. And there is a lot happening in China in so many, it's a big, complicated, interesting, and in many ways unique economy, and therefore it's the second largest economy in the world. It has it's a command economy, so it's very different than, for example, the United States economy, and which is the largest economy in the world. And there's a lot going on in China, and I think it's really easy to ignore what's going on with the property crisis, because right now they're having massive COVID surges, and, you know, probably as usual, kind of possibly underreporting the numbers. Lots of people are dying. There's a huge crisis going on because of the COVID surges, of essentially loosening the zero COVID policies that they've been sticking to for a long time. And that is important, and we shouldn't ignore that, but that isn't what I am focused on. I think the property market is really important because it affects a bunch of other things. Like, one of the factors that it affects is that China is the second largest holder of U.S. debt, U.S. sovereign debt, so treasury bills, bonds, and the U.S. is at the risk of, because once again, they're having a debt ceiling argument in Congress. The U.S. is at risk of getting downgraded right now on their debt, which means essentially our credit score as a country would go down because we have these arguments every time we refuse to raise the debt ceiling. But when you see consumer wealth is so heavily tied up in a property market that's having a huge crisis, and people are actually like refusing to pay their mortgages in China, combined with the fact that we are seeing once again, a risk of the U.S. not paying back their debt. They're going to be okay till June, is what Yellen said. But that combination of factors, China being an investor in U.S. debt, China having their currency roughly pegged to the U.S. dollar, and China having a property crisis, and then the U.S. maybe not wanting to pay back its investors. All of this is like a lot of factors for the global economy. And I know I just spewed an astounding amount of facts at you. So I'm going to read the chat really quick, because I know I have said an awful lot really fast. Hey, YouTube fixed redirect on my phone. It hasn't been working for me for the longest time, and I had to manually switch to this stream. Well, thank you for manually switching, but I'm also glad that redirect worked. The low-cost, high melanin says, sweats and health insurance employee. Oh, we'll do that on a different stream. We'll do that on a different stream where we rant about health insurance. Inflation, recession, and inevitable economic stock market collapse will make housing price crash too. So I will say that while I do think, so economic and stock market collapses are 2 different things. And I spent so much time during the pandemic while we were seeing stock markets go through the roof, but we were seeing real economic damage and hurt to people in real life, saying the stock market is not the economy. It's one part of the economy, but it is not the economy. It is not your feelings and the everyday interactions of people. It's not the unemployment rate. It's not how much you pay for things. Stock market is the valuation of companies, and the stock market is far more speculative. It's far more volatile than the way that the economy interacts. And I don't think that the stock market is due to collapse necessarily, but because we are going to have a recession, we are already seeing massive corrections, especially in stocks that got really highly overvalued during the pandemic, partially because there was no housing to invest in. We had housing rates were going up and up and up. And so a lot of people that were investing in property, either as developers or on an individual basis, were not able to access the housing market because it was so red hot in the United States and in a lot of other countries during the early pandemic, that one of the reasons that we saw stocks get bid up so much is that people were putting their money into that asset class because they were not able to access the housing market. I think that one of the complicated ways in which things are linked is that the corrections that we're seeing in the stock market, aka stock market be down, and we're talking about stocks, right? Bonds are a separate issue, but the bond market's also very interesting right now, and some of that has to do with the U.S. debt and debt ceiling. But what is going on with the stock market right now? It is interlinked with the housing market, but it isn't interlinked with the economy as far as what you see on your effect on your daily life, unless you are someone of the level of wealth where the majority of your income comes from investments in those asset classes, in which case, I don't know why you're here, but if you're someone for which almost all of your wealth is tied up in equity of publicly traded companies, and that is where your income is derived, then yes, the valuation of stocks has more of an effect on your personal economy. However, the economy can go down, stock markets can respond because investors get nervous and they don't feel optimistic when they see recession. But it wouldn't cause a housing market crash. In many ways, they often go kind of opposite each other, because when capital is looking for somewhere to invest and they find that the housing market has started to cool a little and the stocks are down, they might want to go into the housing market. But there's a lot of factors in the housing market because housing is a human need and stocks are not. And because of that, we have more regulations on the housing market in a lot of parts of the world. And there's also a lot more time and delay in the housing market, right? When you invest in property, the property has to be built. It has to be maintained in a different way than when you buy a piece of stock of a company. The housing market speculation is getting wild. My friend in Pennsylvania is reeling at the cost of dilapidated properties that are going for California prices in Philly. Well, that's actually what's really interesting is the housing market speculation had gotten really, really high, but we are finally starting to see on the buying side some of it cooling. The problem was that we reached these bananas peaks, these absolutely bananas peaks during the pandemic. And part of it was that the movement of labor, right? Because so many people were now opened up and being able to move to places that they previously couldn't because they could work remote. So the places that got hit the most by it were places that historically had lower cost housing and didn't have particularly strong or highly paid local labor markets. So we saw this in Florida, we saw this in Arizona, we saw this in Philly, we saw it in Pittsburgh, we saw it in Montana, we saw it in a lot of places, especially places maybe with nicer climates, where people started to move and buy up houses with their higher salaries. And so we saw some of that. California, which is not known for its low housing prices, but has had a lot of foreign speculation. And then London, which has had a lot of foreign, well, the UK in general, but particularly London, that's had a lot of foreign speculation where literally they are buying properties to sit empty and then just buy and hold and outbidding like local consumers that want to use them as housing. In California and the United Kingdom have taken very strong regulatory stances against that kind of behavior, and we're starting to see the effects of that. So California essentially has made it a lot harder to own property that is unoccupied by essentially what way do they have taxes. The same kind of happened in the United Kingdom. The United Kingdom, what they did is they essentially said second properties are now going to get taxed at a much higher rate as a method of essentially discouraging that. And they lowered some of the ways in which you could deduct like mortgage interest and council tax for owning of properties. And then there's a larger concern that they are going to eliminate no-fault evictions, which I am in support of as like a person who rents. But it makes people that might buy housing and be landlords more nervous. And that has an effect on the rental market. So what we see, rising housing costs, then a regulatory discouragement of people buying places to either rent out and just generally investing in property as a landlord. Then how does that trickle down? We get restricted supply of rental units. And that's one of the big drivers, not enough supply in rental units, which is out of control in London and the whole greater London area, partially because of these measures. But the restriction on supply on rental units is one of the reasons that rental prices are getting bid up so high. And then additionally, all of the pandemic restrictions that a lot of places put in against like evicting people for non-payment, the slowdown in essentially during a pandemic of trying to protect people's access to housing, all of that combined led to a slowdown in people investing in houses to rent, which is a huge factor, especially in big cities. So that's like, I don't know. I just really spewed a bunch of facts at you, and I was going to go about this in a more systematic manner. I also have some graphs, so I should probably put some graphs on the screen. The three red lines not working has been shocking. I've been trying to keep up with it. What I have friends whose families live there. Yeah, I've covered way more in depth because like the China property crisis there's so much in there. I've covered it more in depth on a couple live streams, but I'm happy to talk about it more if people want to, because it's important. It is the three red lines and like kind of the way that it did, which was the Chinese government policy under Xi Jinping that was meant to slow down speculation in the housing market and sort of these incredibly over-leveraged property developers. I don't know what that car was, but all of that, seriously? I can't wait till we move somewhere where we have way less traffic noise out the window. So all of the policies under three red lines, like one of the fundamental issues was that I think that they didn't give enough opportunities to, there weren't enough opportunities for local governments to meet the demand for manufacturing new properties. So, you know, part of the three red lines policy was essentially meant to curtail the local cities from the way that they were selling land in order to finance rapid development. And there wasn't a lot of good alternatives, I felt like, proposed. And so part of the core issue, I think, with it was that it was targeted at the financing side of things. And the whole goal was to not have to bail out these companies. And I don't think they did enough to fix the city side of it. That's my, not, okay. Yes, there is no donut today. Geograph Concept says, I am verklempt. I'm sorry. The donut shop is closed. Eric says, rental market versus the gig Airbnb market seems to be a problem in some locales. I guess the gig market is more lucrative, but I would think regular income would be better. I can speak to this as someone who owns a property that was both, one part of the property was rented out as, Aaron owns it, and one part of the property was long-term rental, and then the Airbnb was a different part of the property, was the ADU. For in our cases, the income was much higher, especially when you go kind of seasonal. It would be way higher on the off seasons. For the Airbnb than it would be. I will say that a lot of regulatory cracking down on Airbnb in a ton of places means that a lot of people are turning away from Airbnb, but are moving towards the medium term rentals, which is essentially things for like traveling nurses and people that might want to relocate more than a day or two, but instead would like a place for between 2 to 6 months, which as someone who has been seeking those kind of accommodations in the past, that actually is a pretty underserved part of the market. So I've been seeing more and more of that. And then one of the advantages to that for landlords, speaking without my own bias of what I think renters deserve, humans deserve. But one of the advantages of those is that quite often those medium-term rentals, they do not fall under the same restrictions for landlords as far as rent caps or rent stabilization about raising prices. And generally the people that you're renting to are not interested in long-term leases. And so that can be one of them. New World One says, housing by the seaside is too expensive for the people who work in service industries, and rental stock is short because of holiday lets and Airbnb, etc. Yeah, I do think that Airbnb was a huge driver, like of the short-term lets. I do think it was a huge driver, especially in tourist areas, of the shortage of rental stock, because a lot of these places are relatively small areas that wouldn't actually need that much housing stock in the first place if you were looking at their overall labor sector. But the issue is they don't have any workforce housing, and their economy is based on having people come into town. So that has been a struggle that has been experienced by a ton of different like tourist areas, anywhere where you've essentially going to have a large influx of people coming in that are going to stay in short-term accommodation. And you used to plan for that by planning for zoning versus housing. Like in zoning, you would plan for this is hotels and this is workforce housing. However, because of these sort of unregulated short-term rental markets, the zoning isn't factored in there. So when you're saying, oh, we have this many housing units because we need this many workers for the tourism and hospitality industries, if half of those are being used actually as hotels, it doesn't work, right? Yeah, I got sick of our houses getting snapped up by foreign investment to just sit there. It's why I can't afford one, and I make enough to get a loan. Yeah, it's a huge issue for a lot of people. I think the frustration there is the idea that investment in property kind of comes at the expense of housing as a human right, and that has been one of the big issues. Oh, Texas. Texas is being one of the places that had a lot of people move to it. Oh my gosh, there's so many chats, y'all. Everybody has a lot of feelings. Okay. The stock market is based on gossip-based values. Inflation is pocketbook-based values. Well said. I like that. Yeah, stock market is about feelings, and inflation is more tangible feelings. David says, I just looked at my stock portfolio. Now I'm depressed. Don't look at it. It's fine. You don't look at it. Look at it once a decade. Just get it automatically rebalanced. Do housing market crashes tend to impact those who have not invested in property or are not intending to sell in the short term? Well, that's actually a really interesting question. So one of the ways in which it can impact people that have owned a home but are not intending to sell in the short term is if they end up in a situation where they have negative equity. We are at really high risk. A lot of the recent buyers so negative equity essentially means that you owe more on your house than you have equity in your house. And this is what we saw during the financial crisis, right? Because we had so many people that bought at the height, they bought with high interest rates, they bought with a relatively low income, and then we had this entire financial crisis because of the way that lending was happening during the financial crisis, and a lot of people ended up underwater on their mortgages. So negative equity means the property is worth less on the loan than the collateral for the loan. And in Britain, a fall in housing prices by 20% would leave up to 5% of mortgages in negative equity. This was a stat I got from Neil Hudson of Residential Analysis, which is a real estate consultancy. It's a huge issue if you're looking at negative equity, because negative equity means if you're underwater on your mortgage, one, it's bad for your credit. Two, you might be in the situation where you are forced into a short sale, all sorts of things. However, the people that are most at risk for negative equity are actually folks that bought while housing prices were so high. However, we have one factor that is different, especially in the United States and Canada, in this time is different than last time, which is that when housing prices were highest, interest rates were relatively low. And because of that factor, the likelihood of people being in for negative equity is somewhat lower because interest rates were not quite so high as they were last time we were seeing a lot of overvalued houses. So that is, I guess, good. But, the one of the analysis I saw from Nationwide said that 750,000 UK households are at risk of defaulting on mortgage payments over the next 2 years. So negative equity is a big risk for people. However, if people bought 10 years ago, before we really saw these prices get really, really bid up the way they were, or people bought even longer ago than that, they are not as affected by a dip in housing prices. The crash tends to affect them less. Where the crash can affect them is if that leads to other parts of the economy contracting, and possibly they have a loss in income because they work in something around housing, or they work in something involving financing, and they lose their job as a result of the overall problems, which we saw lots of people, right? Like we saw a lot of service workers lose their job during the financial crisis because there was less money out in the economy because all these people were underwater on their mortgages and foreclosing on their mortgages. And that meant that the economy contracts, and the people that are in the most vulnerable kind of working positions, which tend to be hospitality, service industry, the tourism, all of those kind of industries that are the first to go, those are the people that lost their jobs. And even if they didn't own property, they felt the consequences of what was very much a housing speculation driven financial crisis last time. Which, it wasn't all just to do with consumers, right? Like there was a lot about how banks were lending, how banks were then reselling those mortgages, and then they were in people's retirement. So yeah. If you're not invested in property, the other way that you could find yourself hurt by a housing market crash is if your portfolio is kind of tied to that asset class in some way. A lot of people won't be directly involved in property, but maybe they invest in a REIT or an ETF that kind of tracks the housing market. And so possibly the value of their overall portfolio is dropping, even though they don't have a property directly. So it's an important part of the economy, but no, you tend to be far less affected by a drop in housing prices if you're not invested in property. If there is a housing market drop from these really high values, one of the advantages here is that demand slows. We're likely going to see even more of a drop in housing prices because, demand isn't red hot. So when there's not 100 people trying to bid for a property, then the likelihood that the, buyer is able to close for less than asking, all of those things, that it sits on the market longer, and then they're more likely to lower prices, right? So we can often get this sort of fulfilling effect. One of the advantages is that people that might have been locked out from the high housing costs before, the high property costs, not housing costs, but the high property costs before, may be able to get into the market. But because we are trying to tamp down on inflation, which was partially very much driven by how high housing costs were getting during the height of the pandemic, interest rates are going up right now. And the combination of interest rates has not been enough to kind of offset for a lot of buyers the lower housing prices. So, housing prices might be dropping a bit, but with interest rates going up, people are finding themselves less and less likely to be able to afford the monthly payments. And so they decide to pull themselves out of looking. And so they're going to stay in the rental market, or they're going to stay in their current property and not change. Additionally, those kind of first-time home buyers, or those home buyers that maybe don't have as much of a down payment, it's going to be harder for them to finance, because as soon as banks get nervous, we already have seen a huge cut in the types of mortgage products that are available to buyers that don't have 10% or 20%. So when interest rates are higher, when recession is looming, banks get nervous and they start taking away some of the lower down payment mortgage products and the kind of more risky propositions. My parents bought a rental property in the 70s with 3 apartments. The tenants are all not paying, but they can't do much easily. Wow. Is this in New York? I would be curious in the city, because there's so many more restrictions essentially in the city as far as what you can do with non-paying tenants. But yeah, It is in the city. Yeah. I know there's a lot more. New York City is just it gets its own situation as far as housing costs, because there's so many rules around rentals and everything there. Charback says, what happens when USD as a global reserve currency gets dropped, when a gold-backed BRICS central bank digital currency takes over or something? It's a good question. I mean, I don't tend to entertain too much ideas of a digital central bank currency being something that is going to be. We've already seen sovereign governments. The most recent correction in crypto has made a lot of sovereign banks start to back away from what they were already doing, their investments into digital currency, into decentralized currency. So sure, let's move away from that. But I think it's very important to talk about what happens when USD as a global reserve currency gets dropped. I don't think it's imminent in the next 10 years, but I think it's very, very possible to see in the next 20 plus years. And that is a huge issue for the United States, because the freely flowing money in the United States economy largely comes because our debt is really desirable. And one of the reasons our debt is really desirable is because of our status as a reserve currency. We are seeing fewer countries pegged to the US dollar. But right now, the US dollar is doing very, very well vis-a-vis most other currencies in the world that are also used as lesser reserve currencies. So the euro is also used as a reserve currency. Both our loose and our strict pegged currencies don't show any kind of signs right now of dropping the peg at the moment. So I do think that the use of us as a global reserve currency, our reputation as a country, and this continued fuckery that keeps happening in Congress of not raising the debt ceiling, and then our credit rating possibly getting lowered, and our inability to essentially assure the people that have lent us money that we're going to pay them back on time. I think that there is a real risk to the United States economy is that right now, the United States economy is still the largest economy in the world. It really was thought that China would overtake us sooner rather than later. But COVID really screwed up a lot of things for the Chinese economy. And I think it's probably going to take a lot longer for China to overtake us as the largest economy in the world. I will still say that people view US dollars as a very safe investment at the moment. And one of the reasons that a lot of people are continuing to invest in US dollars is because of the high inflation going on right now. I bonds, other kinds of U.S. Bonds are really attractive to a lot of investors because of the fact that they're delivering now pretty reasonable inflation-adjusted returns for a relatively safe investment. U.S. bonds are still not junk bonds. Fewer and fewer transactions every year are being done denominated in US dollars. So I think there's a real discussion to be had about there. I mean, I've said that we're living in the fall of the US empire for, I don't know, the past 10 plus years. I think a lot of ways that the US chooses to do business and chooses to interact with the greater world from an economy perspective is at real risk and really stinks of a dying empire. Not to get too over the nose about it, but I don't think that the risk is really going to be coming from digital currency. I do think that fewer and fewer transactions having to be denominated in US dollars as it becomes easier to exchange money in local currencies because of the proliferation of exchange apps and ways of doing essentially digital transactions. But I don't think that it is blockchain-based situations that are going to upset it. I think we very well could see it with other sovereign currencies. And I think one of the ones is yuan. I mean, it's important to look at China still. Like, China is still very important. Mystery the Maynard says, you just briefly mentioned zoning and my mind was immediately thrown back into the angry tirades of my city planning professors. Memories. Yeah, I mean, I did my thesis on the rental market. So, and I've done plenty of testifying at hearings. This is Yembi here, so. Oh, Carl, thank you. Hey, hitting the like button won't lessen your portfolios. That is true, but it might up mine, right? Housing types do matter for growth and workforce stability. And Eric says, treat the stock markets like real estate, buy and hold. Correct for all of that. David says, my brother decided to get in the specialty short-term rental market. He seems happy so far, but I don't ask him about the money. I would be very curious to know more about that. I live near Hilton Head Island in South Carolina. The housing market for service employees is so tight that the hotels and restaurants are having a difficult time finding and keeping employees. Yes, so a perfect evidence of why the donut shop is closed today is Portland is also having, of course, rental prices going up. Low vacancy rates. Things ain't going great with the Portland rental market. And so the cost of living ever increasing in Portland has meant that it is very, very hard, especially for small business, service-based businesses, to find and retain employees. And because of that, we are seeing things like the donut shop closes because they don't have enough staff. I mean, that also could be just because we are have a triple respiratory pandemic going on right now. But people always think about these large landlords, not the mom and pop type landlords. I would say that I don't know if people necessarily, I think that effective landlord lobbies have done a great job of showing off the mom and pop type landlords. Those are exactly the landlords that get all of the exemptions when it comes to a lot of rules. I say this as someone who's about to be a landlord. I do think that people do think of those type of landlords, but I think there's a lot of depersonalization that happens when talking about kind of landlords versus renters on both sides. I think that there is a lot of depersonalization that happens of like, oh, we're renting, and the renting means that the renting means that, like, these people are just people that pay us every month, and we want them to be quiet and not ask questions. Like, you want a good tenant, right? But you're doing it for you're doing it for profit. You're doing it for being able to, like, either buy and hold and have someone pay the mortgage off, or you're doing it for income, depending on where the kind of metrics work in your owning your rental. And then I think on the flip side, a lot of renters and a lot of people that talk about rental policy view landlords as this, like, even if they are mom and pop, as this sort of evil thing. And I don't think that landlords are evil necessarily. I think that housing is a good that I would like to buy. However, I think there's a lot of importance in regulations that make sure it is affordable, and there needs to be investment in it as a human right. So we're never going to get enough mom and pop type landlords if we don't make it easier for people to invest in new developments, if we don't allow for density. And so, it, my like ideal scenario is, worker owned housing, that, it, rather than rentals, collectively owned models, land trusts, all of the different economic models that we have, shared equity, group equity co-ops, collective housing organizations. All of those things, I think, are really valuable ways to have diversity in the type of housing, because we need diversity of housing stock. Some people want to live in single family homes with a yard. Some people want to live in big apartment blocks. Some people want to live farther out and closer in. Like, we need diversity in housing types. We need multi-generational housing. And the only way that we get there, in my opinion, in a way that is equitable and fair, is by allowing more easily for collective ownership models that allow people to buy in without having access to huge amounts of capital in order to, be able to buy a house in these ridiculous rental rates, but still have a participation in the management of their housing. It's frustrating because we do have the mechanisms to do this. They also tend to be commonplace in a lot of, especially former Soviet countries, where there was a lot of emphasis put on building fast workforce housing. But then that meant that kind of when the systems crumbled from the communists, often what would happen is they kind of got converted to collective ownership models. But it's like important to consider that there are alternatives. It isn't just landlords, speculative buyers, and renters who are screwed. Like, there are other ways to do it. I think luxury kosher rentals is a niche market. I love it. I'm absolutely positive it's a niche market. Isn't that, like, kind of by definition a niche market, just because of the percentage of people that keep kosher in the world is always going to be small? It is a very slow fall of the U.S. empire, going out on a low note like Rome. Here's the thing. Rome lasted a lot longer than I feel like the U.S. empire is going to fall. Like, I think it'll feel slow in our lifetimes, but I think it's going to feel... I think, like, the blip of the American experiment, I think, is going to be very short-lived on the graph. I am not bullish on America these days. That being said, I still have a lot of my money invested in American securities, so... Jenny says, I am so glad we bought our house in 2021 with a fixed rate mortgage for 5 years. Oh, you're Canadian, right? 5 years is so short for a fixed rate mortgage for America. And it just, oh my God, I hate hearing about your mortgages. So I think it's like I think it's one of the most terrifying things about the Canadian housing market, which is also, like, worse in all of the cities than most American housing markets. But, like, The people that are at most likely to be at risk, I think, are places where there's a proliferation of these very short-term fixed mortgages, like Canada, like the United Kingdom, where they tend to not buy for long periods of time and the rates get adjusted on a regular basis. That's also true with Australia. A lot of Australian mortgages are that way, and they are also having a housing crisis. And then the people that bought at the peak of the market, so 2020 and the 2021 and the first half of 2022. I think those are the people that are at the most risk long term. I hope it works out great for you. I'm glad you got a 5-year fixed rate. I'm sorry that is for some reason a long fixed rate in Canada. I don't like it. David says, you asked how my brother's venture was going. That's what he signed up for. Yeah, that's what I figured. It's a very interesting niche market. What makes a short-term rental kosher? It would be like, does it have 2 sinks? Is that and I guess it's been like properly blessed. It does sound like a very interesting niche market. All tourist destinations from Puget Sound to Sun Valley to Palm Springs have the housing issue. Yeah, it isn't even just tourist destinations too. It's anywhere where there was an underbuilt of workforce housing, and then suddenly there were all these remote workers moving in. So we saw it in like places like Missoula, Montana, which is not a destination place, but it was like, oh, it's held up as like, oh, it's got outdoorsy options and housing is so cheap if you're coming from a big California city or from Seattle. And so we saw just absolute housing crises going on in even those smaller places. But yeah, Sun Valley has been, just to be clear, Sun Valley has been unaffordable forever. It's like, I think outside of Sun Valley is like the richest, it's like the richest mile in, yeah, I mean, Sun Valley's so rich. Bruce Willis lives there. No blessing, but it has a kosher kitchen is usually the concern. Yeah, it's very interesting. I always cringe when someone shows pride in being a landlord because that's because I've yet to have a landlord who treats me anything as more than passive income and cheats me out of every dollar. Interesting. I have mostly had, I think, really good landlords, but I am one of those people that I very much lean towards not. I know a lot of people really swear by finding a small landlord, and it's advice I've given to some people that like have struggled to find something because they had like a crappy property management company who was smearing their name. It was like advice I gave in a Slate column like a couple weeks ago. But I know like far more small landlords who don't educate themselves on the law. They think that they always have kind of an exception to it. And so I actually really like our mid-sized property management company. And I know that feels like kind of like if you don't want to be depersonalized. But what I like about it is they're still local, but they own like a ton of different apartments and a ton of units. And so they are never not informed about the law, and they're very responsive. And I have found that quite a deal better than, when I've had a smaller landlord who's kind of like a benevolent slumlord. Even if they're a nice person, like we don't get the kind of level of maintenance on the house. But, that was also back when things were cheap in Portland that I had a benevolent slumlord. The Canadian housing market is the worst. 5 years is the longest we could get a fixed rate. I mean, not that I think I can solve Canada's housing market problems, but I feel like that might be the first step. Is maybe they could consider having mortgage products that are similar to the United States. I mean, I don't think we're winning at having the best mortgage products, but we definitely have better options for stability than Canada does. I paid off my 14% 15-year mortgage in 10 years. It was a priority. Whew, 14%. Are you based in the United States, Carl? Because that's very high for a U.S. mortgage. I don't know if you got that at like in 2008 or something. But yeah, I would absolutely prioritize paying off a 14% mortgage. Or was this in like the 1980s in the U.S.? David says, imagine you are concerned with keeping kosher and you worry about renting a house full of dishes and other items that have bacon grease on it. Yeah, it makes perfect sense. I actually really like that as a niche option. That's one of the things I also like as when looking for Airbnbs as a vegan. I also find that like it is nice to have, I used to look for this even when I was couch surfing. Like it's nice to have a vegan host, not because I have like religious issues with someone cooking bacon or whatever in the place. I don't prefer it. But the advantages is that they'll like know more about where I can go to eat, or there might be like, soy milk in the house for my coffee or whatever. So it makes perfect sense that if you're keeping kosher, you would want to have that, especially if it's a religious obligation for you. I want to move to Missoula for the nature. Everyone else had the same idea. Exactly. Montreal rents have more than doubled during the pandemic, and landlords are evicting older tenants who pay lower rents. Yeah, so this is, let me find some of my Canada stats here. Sure, let's look at some graphs, you all. So I have some graphs. Here we go. Camera with Apple TV. Oh, nope. I don't know why I didn't share. It's supposed to be sharing. There we go. Okay. So this is looking at 2020. And we're going to kind of move through some of the different graphs as we talk about this more. So this was housing price increases in 2020. And notice why Turkey jumped so much. So Turkey right now has a President Erdogan who does not believe in raising interest rates. And so, as you may have noticed, I have continually talked about how raising interest rates is what you do to combat inflation. Turkey refuses to raise interest rates, and every time he gets a chief economist or someone in charge of their central bank that tells him he needs to raise interest rates to tamp down on the inflation, he fires them. So not based in the way that modern economic theory works. So Turkey has a huge hyperinflation problem, which is having a massive effect on folks. And one of the side effects of that, too, is that Turkey is having a big restriction on demand as well. This is 2020 numbers, but it has continued this way in Turkey and even gotten worse as they continue to experience hyperinflation. And but also the access to places to rent in Turkey has gotten very bad. And that is because of the war in Ukraine. So Turkey is one of the countries where Russian nationals can stay visa-free and can actually get into. And because of that, a lot of Russian men that wanted to flee the mobilization went to Turkey. Also, just generally, sometimes entire families were leaving that wanted to flee Russia would go to Turkey. Then additionally, Turkey has been taking in Ukrainian refugees. And so there has been a big impact on the restrictions in the rental market there. They are also Turkey has been taking in refugees from Syria all along. And that has restricted housing supply. So you've got that combined with a cost of living crisis that is happening from their hyperinflation. So Vice just did a video about the fact that they're at 100% inflation, and I'm horrified. Literally everyone will tell them what to do, but they won't listen because Erdogan is kind of like a Trump-like figure. So New Zealand has a very unique housing market that we I don't know if we have time to get into, so we're just kind of move on along. But then you can see that a lot of the other increases that we're seeing are in other OECD countries. Particularly, we are seeing it in places where there is a drive up in costs from other things. This is a more recent graph, and this is OECD countries. So OECD is essentially a club of rich countries. So this is housing prices and rent. So you can kind of see how they often move in tandem, but not always, because sometimes there can be kind of an inverse relationship between rents and housing prices. As we see, housing prices go up, more people decide to stay as renters, and then the demand for renting goes up. So generally, when we look at the EU, we are seeing pretty sharp increases over time that is happening right now. But generally, we are seeing the house prices raise quite a bit more. So let's talk about where are my US ones. Okay. So, this is what is kind of important here when it comes as household debt as a percentage of GDP. So one of the big indicators that happens as we see problems in the housing market, as we see rents increase, as we see generally housing costs increase. So in the US, it's about 30% of household expenses are housing costs. It makes up about 30% of the CPI. Household debt rising as a percentage of GDP is usually indicative of a financial, either a recession or sometimes even a financial crisis. And we always see them household debt percentages start to rise as we start to see expenses for those core things like housing, food, transportation go up because people start to borrow in order to afford the basics of life. And South Korea, household debt as a percentage of GDP. So here's the thing. South Korea, Hong Kong, and Taiwan are part of the group called the Asian Tigers, which is Singapore, Hong Kong, South Korea, and Taiwan. Them and China are kind of considered amongst these very high growth countries that came out of this, big financial crisis that they had in Asia in the late 90s. So one of the reasons why they have been able to keep inflation lower than the West, but although inflation is rising, has largely been because of the way that they have been able to approach their current account status, which is what we call the balance of trade between different countries. Balance of trade is technically a different thing, but anyway. They have long been able to prop up their kind of debt because they do a lot of export. So they would, South Korea, a huge percentage of their economy has been semiconductors, electronics, and industrial goods, as well as Taiwan. And so those would usually boost up their current account surpluses. But now they've got a surging price of imported oil going on right now because all of the energy it takes to produce those things is going up and up. And that is part of what is driving this higher percentage of GDP. And I mentioned that in China, close to I think it's 80% of household wealth is tied up in home purchasing. So South Korean debt is so bad post IMF crisis. It has never calmed in decades. Yes. So the IMF as a player, as a global lender to countries is a huge factor generally when it comes to all of this kind of balance of trade and the ability of central banks to essentially do that. So the average new interest rate on a household loan in South Korea now reached 5.2% in September. It is up about double from a year prior. In Hong Kong, a lot of people think that there's been essentially just a massive increase in Hong Kong of housing prices over the past 2 decades, essentially after the late 90s crisis. And Hong Kong has just been it's one of the most expensive housing markets in the world. There is a lot of speculation that Hong Kong could see a correction in the 20 to 30% range. And this is really concerning when we look at the fact that Hong Kong has a high percentage of debt and borrowing and such large percentage of household wealth is tied up in housing. So, and Hong Kong is not unaffected by what happens in China. And the China property crisis is very much linked. A lot of people in Hong Kong are Chinese nationals. There's all sorts of political issues between Hong Kong and China and whether or not China thinks of Hong Kong as a sovereign city-state. But Hong Kong in general is the fortunes of China are very much tied to Hong Kong, despite having essentially a separate central bank. A YouTuber I followed for years lives in Hong Kong with her husband, and the way the prices of housing were so bad they couldn't get one for months when trying to plan a family, and this was pre-Rona. Yeah, and that's been true for a very long time there. Maynard says, I'm convinced that if graphs had more mass market appeal, they would have been in the artistic theme of your book. I mean, I can make another book that's just all about graphs. My agent was trying to sell me on the idea that, like, I could do a book of graphs, but I couldn't figure out, like, what it would be other than just, like, a book of graphs. I don't know what's going on with By the Block. I haven't heard of By the Block, so I would love to know more about this. I do not follow this, so. David says, vegan villas, new business venture? No, I don't need any more businesses. I rented in Montreal for more than 20 years, moved all over the city, and never had a good landlord. Interesting. Also, like, does Montreal have, like, a fair amount of restrictions on, like, I feel like Montreal had rent stabilization. I'd be very curious, to know. Okay. Renoviction. Oh, yes. Okay. Renovation eviction. Yeah. So the landlord being able to evict a tenant to do major repairs, only usually they just change kitchen cabinets and paint the walls, and then they bring in new tenants for higher prices. Yeah. We've seen that also with, like moving a family member in, which is often one of the exceptions where you can essentially do no fault evictions for either renovation or moving a family member in places that have laws around that. Like, a lot of places don't have laws around that, but in places that do have tenant protection laws, they'll do the renoviction, or they'll like move their cousin's kid in for like 2 months, and then they'll flip it and put it on the market. Infographic books are surprisingly popular. I don't know what I get sent them. Like, I have some up there that I get sent them as PR books, but I don't know about that. Okay. So, do we want to talk about Japan? Because I think that Japan is a very interesting case study when it comes to all this. Because Japan has a slightly different situation. Sorry, I'm just screwing up my cameras here. Japan has a slightly different situation. Is that it has had tumbling asset prices since the 90s. So the Asian crisis that happened in the 90s, they has had essentially a huge financial crisis in Japan in the 90s. And since then, they've had a deflationary currency. And one of the things that is very concerning as we see these housing prices start to drop from these absolutely ridiculous highs that they were in is that tumbling asset prices can really derail growth. So in the 1989 to 1990, the country's stock and property prices began to slump, bringing to end a like multi-decade boom that kind of kicked off with rebuilding post World War II. The declining value of land and buildings, which had been largely used as collateral during their big boom in the 1980s, essentially meant that consumers started to get really scared of investing. They started to see disinvestment by large companies in Japan. People were less and less likely to buy houses, and it pretty much halted the economy's growth. That is one of the reasons that Japan has had a deflationary currency for so long. One of the concerns that we should have while we look at all of the Asian tigers and their high debt rates and the fact that they have these property markets that are very concerning is that there is a very strong possibility that we see this happen in the Asian tigers, that very similar to the trajectory that Japan took from the 90s on. So yeah. Let's talk about how they're literally giving their houses away. Yeah, so houses in Japan are built to be essentially taken down. They are built to be temporary, like 20 to 40 years. But normally what makes a house valuable, like houses themselves depreciate. The land under them usually appreciates. However, because they've had tumbling asset prices, the land under them has been depreciating. So now you have a house that is depreciating and land that's depreciating. No one wants to buy it. And then they also have a bunch of demographic factors that go into this, which is that people more and more people are living in the cities and abandoning the country and blah, 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 blah. But a lot of it has to do with their asset prices. Low Waste High Melanin says combo of aging demographics and deflation. Worried about what that means for their slowly increasing houseless population. I actually didn't know that they had a slowly increasing houseless population in Japan. I would be interested to look into that. So Jenny says there aren't rental protections except for people that have been there since the 90s. The tenants who have been in the same apartment since the 90s have zero building maintenance, and these apartments literally have exterior walls and balconies fall off. So this is one of the really big concerns when it comes to what we can do about rental crises, what we can do about rapidly rising rental prices, because one of the flip sides of doing either rent control or rent stabilization is exactly this. Landlords are not incentivized to improve the properties. You also can see that if rents can't be raised, people stay in properties longer. There's essentially no friction in the rental market, which means that people will stay in places way longer than necessarily makes sense for them because they've got a rent stabilized or rent controlled place. And then that means like the newer people, the people that might be lower down on the type of housing that they want, don't have anything available to them because there's these people that can afford nicer housing that aren't moving on to nicer housing because the jump is so much and they've got this rent controlled place. So the other thing you see is that if you control the rent, if you do rent stabilization or rent control, you'll see it come out in other ways. We see this a lot in New York City where there is more rent stabilized and rent controlled places, but you see the fees add up in other ways. You see very high key fees where just to get the key to your apartment, you might pay amounts that are above and beyond what you would pay necessarily for a deposit. You pay broker's fees because there's kind of unnecessarily restrictions on it. You start to see like other kinds of ways where this has a side effect, and figuring out how to balance those things is one of the hardest parts of rental economics because it isn't fair to renters to have their housing prices go shoot up so much. And at the same time, you don't want to disincentivize landlords from investing, which is one of the reasons why what has been going on in the UK is so concerning. Landlords had been leaving the rental market in London as it has become less and less profitable. Essentially, since 2016, the UK government has been increasing taxes on purchases of second homes, which I mentioned earlier, and they've also cut the amount of tax that landlords can claim back on their mortgage payments. And so, a lot of the projections say that they need about 100,000 new homes per year in London, and they're only building about 43,000 homes per year. And this has driven what is a massive increase in demand for rental properties with very, very low supply. People are seeing what they're paying year over year in London jump by like 50+%. The inventory is incredibly low, and that has to do with these restrictions that they tried to put in place to avoid the profiteering. And so the balance of what you do when it comes to a privately controlled rental market when housing should be a human right, you end up with this problem where you try to use economic policies to restrict supply, to protect renters. And in the end, what you do is you just end up with the supply gone down, and then you have supply and demand come out in other ways. And so there are just a bunch of ways in which it can really have huge effects. And then one of the other problems going on in the UK right now is like their massive freaking fiscal crisis that they've got going on. So their series of prime ministers that they had, they had that super disastrous mini budget in September. And essentially, because of that, it had such big fiscal effects on the on banks and the entire lending industry that a ton of lending products were taken away post the September crisis, and then, but at the same time, that they've got this huge cost of living crisis going on right now because of the bid up on oil heating prices, and because of that, to tamp down inflation, they have been raising interest rates. Well, when they raise interest rates right now, which their inflation was like the highest since 2008, like in, I think, around November, their housing prices have risen 19% since the start of the pandemic, but income has only gone up by 9%. And in addition, you've got all of this cost of living crisis that's happening in the UK right now because of the cost of oil plus Brexit. Can't ignore Brexit in that. And what that happens is that even fewer property investors are interested in buying a house. And then the individual single family homeowners that were in kind of those worst mortgage products are seeing their interest rates rise, and it's becoming less and less affordable for them to hold on to their homes, which is why we're seeing so many people at risk of default right now. So yeah, there is really just a lot factoring into the UK rental market. And it's really important to talk about London just because such a large percentage of the UK lives in London. And London has long been one of the most like expensive rental markets. But I do think it's important to note how that the UK rental market, like even with this like wild housing prices that they're dealing with in the United Kingdom, it still does not compare to all those Asian tiger countries. So in South Korea and Taiwan, the average prices for a home now sit at 19 and 16 times local incomes. In Hong Kong, the multiple is 20.7. If you look at Greater London, the most expensive place in Britain, it's only 8 times. And so it's that differential really factors into why we should be concerned about the Asian housing market. I don't think that there is any way in which I'm going to give you a super positive spin on like there is anywhere that's doing it well. Europe is having a huge supply issue right now, even though a lot of the EU actually has more workforce housing built, especially the former Eastern European countries, because the communists did a good job of building housing. Might not be pretty, but they built a lot of it. And then in Western European countries, they tend to have more kind of protections for renters. But the problem right now is there's such a refugee and migrant crisis in the EU because of the war in Ukraine, Syria, and migrants that are trying to move up from countries that are experiencing climate crises in Africa, especially former colonized countries that are trying to move up into Europe. So they have more and more people that want to live in European countries and they aren't building houses at a fast enough rate. And then the cost for building those houses has gone up so much because of the oil crisis, and the fuel crisis means the inputs are much higher. Generally, if we want to fix housing stock, all of the like leading economic theory is that if we loosen migration restrictions, while we might in the short term have a supply issue, in the long term it supports building more housing, because in almost all countries of the world, recent migrant labor is one of the fundamental parts of building housing. It's often done because it is a job that doesn't necessarily require language skills and just requires like brute force labor. A lot of times recent migrants, from whatever that migration pattern might be in any country, in the United States, it tends to be from Latin America, from lower income Latin American countries. In Europe, it tends to be from Eastern and Southern European countries, go to Western and Northern Europe to work. And then in Southern Europe, they tend to come from Africa. And then in China, they tend to come from rural villages in China. everywhere, migrants are absolutely essential to building more housing, and that is going to be the backbone of the way that labor flows. And if we loosen migration restrictions, while we might have short-term supply issues, in the long term, we'll build more housing. So it's and we have to admit that people are going to be moving around the world because of the climate crisis. Like lower income countries right now, people can't stay there. And not to mention wars, insecure land rights, colonization, any number of things that cause people to migrate. But that is one of a tiny percentage of factors that we have to do overall in order to fix the housing crisis. I miss the cultural stuff, but I'm certainly glad I don't live in London right now. I was reading the stories of people looking for housing in London, especially students, and even just like looking for rooms to rent. And I was so glad I didn't end up going to grad school this year in London. Low waist, high melanin says, really, honestly, really feeling burnt out in the Bay Area right now. Yeah, San Jose is currently the most expensive place in America right now, and the percentage is 12.6 to 1 for housing prices relative to income. So I'm going to be down in San Jose in like 2 weeks. Jenny says, every morning I wake up thankful I'm now in my own home, not an apartment in Montreal. According to the law, you can't be charged for deposit, first or last month's rent, or key fees in Montreal. Every single landlord asks for it, though. Otherwise, you don't have a place to live. Yeah, that's one of the other issues going on there. Man, there's so many comments. Everybody has lots of feelings. I apparently didn't need a donut today or to prep that much because everybody's got stories about housing, which really, once again, highlights the fact that, housing should be a human right and we all need to be able to get affordable, safe housing. So, yeah. I would love to see us build up here in California. We keep building out and it's not useful. We also need better zoning rules. Not being able to build in a walkable neighborhood sucks. Yeah, I also think inclusionary zoning is really important. Inclusionary zoning essentially says that you have a mix of housing in different areas. And inclusionary zoning means that you're zoning for all different types, multifamily, single family homes. And it overall is a way of increasing housing density while also increasing housing types. One of the big issues that we've seen over, the past half century is zoning was really focused on this idea of we have dense housing only in the urban core, and then we start to get more and more single family homes as we build out in suburban sprawl. And there were a lot of regulations that were happening in that. As we saw in suburbs, we would regulate the zoning to keep things low density. And it was impossible to find single family homes that were affordable inside the central city, and you would only see the increased density. So if people wanted yards, they'd move out to the suburbs. But honestly, a mix of housing is really important for both walkable cities and for making sure that there's a affordable housing in all different parts of a city. So yeah. A year ago, you could get a mortgage at 0.8% interest for 5 or 10 years fixed rate here in Switzerland. Now I think it's up to 2.4% or more. Gosh, to live in Switzerland, your access to capital in Switzerland is wild. 2.4% is still really low on a global scale. I will say that is still lower than the lowest mortgages that anybody could get in America or Canada. But I will say it is notable to see that is a almost threefold increase. So, yeah, that is a really high increase, but I will say I'd take my 2.4%. Okay. This was a lot. I don't know. I have a lot more notes that I was going to talk about, but I feel like maybe we need to end it on some positive recommendations of how we can fix the housing crisis that is going on everywhere. Did I miss anywhere? Did I talk about Australia? I don't know. I had more graphs, y'all. Uh, oh yeah, here's some more depressing graphs. So this is UK mortgage payments. This is from Financial Times. First time buyers, this is the percentage of their take home pay. This is one of the reasons why it's so hard, especially for millennials as a generation, to be able to afford. The people that are going to be most screwed in the UK are people that bought in the last couple years, probably. The what is this? Oh, this is from the Federal Economic Data Bureau, FRED, as we like to call it. So the shaded areas indicate U.S. recessions, which we claim we're not in anymore. But we are in a recession. But apparently we aren't, based on the economic data. But overall, this is showing you what the housing costs were in the United States. And something you can really see is how much the peak, the National Home Price Index, and you can see how much the peak has really jumped up in the past couple years. And it's starting to taper down now, but interest rates mean that that isn't really affecting individual buyers. So this kind of talks to you about how the housing market is being reshaped. This is from The Economist. And what this is doing is kind of showing you that one of the big issues that we are having is that it's harder to get skilled jobs that will then pay you enough to live in the rural areas of America. And so one of the things that is really frustrating and really forcing people into moving into these really undesirable housing markets is a pursuit of a job that pays well enough. But then you've kind of got this cycle of you've got more people moving into the city and people are moving into cities and there isn't enough housing for them. And then the amount that they need is wild. And this is looking at the places that had the highest increases of rent. This is from May 2022, so things have changed a little bit. One of the things is we do have a slow uptake. Miami, Florida was the second highest last year. Cincinnati, Ohio actually beat that out, depending on which metric you looked at. But this is how much rent has jumped. And where you are seeing it, look at this is a list of places that used to have cheap housing, but didn't necessarily have high-paying jobs, and doesn't have a lot of regulation. So we're seeing it very much like a lot of these, and then good weather. So Florida, Orlando, Las Vegas, Phoenix, all of these places have sun, I will note. San Diego, sun. Atlanta, less sun, but still some sun. Austin, Texas, which had huge rent increases. And a lot of these places, Boston is an exception to this, but a lot of these places did not have very strong rental protections or rental stabilization in place. And so because of that, you really see that. Why is Boston exploding? My thought, I don't actually know if this is true. I'd have to look at it, but I think one of the reasons that Boston is exploding is because there was it's one of the things that happened to London too. Boston is very reliant on a lot of foreigners that come in for higher ed jobs because it's such like a large percentage of the economy in Boston is higher ed and like research work. And I think there was a real holdup in student visas to come in. And so I think they got a big burst. But I'm not actually, that's my speculation, but it's not based on real data. So we can look into it. But Boston does have some rental protections in place in a way that some of these other do, as well as Chicago. Yes, this is one of the things. The people that were most affected by rental increases were people that were looking for new places. And, you know, that isn't to say that a lot of people weren't staying in their places and then their rent jumped, but people that were seeking new leases were the people that were seeing the largest increases. And we are seeing some of the highest occupancy rates, meaning that renters are not moving around. There is less people are less likely to try to move between housing. They're trying to stay where they are. Las Vegas is getting a lot of Angelenos getting priced out of their home city. Yeah, I'm not really surprised. That's also what's happening in Arizona as well. And, you know, it used to happen to Oregon. So, I think that's it. I think that's all the graphs that I have for you, y'all. Oh, this is the CPI. So we are seeing that the CPI inflation overall is dropping, but housing prices kind of show up slower in CPI. And the reason they show up slower in CPI is because people tend to sign leases. People's housing prices adjust more slowly than, for example, groceries do or gas prices do. So it takes longer to show up in the CPI. However, the housing prices going higher was responsible for a large part of the drive in inflation. And now we are seeing that as inflation is falling because of the rise in interest rates, we are still seeing that housing prices are now they've got a delayed effect and they're still going up. Low Waist High Melanin says, oh God, the price of eggs, though. I'm so bothered. That's my main protein. Yeah, I've heard this from a lot of people. I haven't actually been tracking it, but there's a bunch of people talking about it because I guess good plug here is that it is Snackuary on the Oh My Dollar forums at forum.ohmydollar.com. Come join us. We have Snackuary. It is a challenge. There's a link down below in the description where it's a challenge to work on your food expenses. You can either be tracking them, you can be trying to lower them. We do it every January. You get cute cat stickers at the end of it. And we like to pretend the forum is about finance, but it's really about plants and cats and dogs. So, it's overdue you brought up Snackuary. Correct. All right, y'all. I have some work to do, and we've been streaming actually for a long time, despite the fact that I didn't get to talk about donuts at all. No donut forced us to look more inwardly. The donut of the soul. All right. Thank you all for coming and joining. I'm sorry there's no donut this week. Hopefully there'll be a donut next week. I wore my spooky dress, by the way, because we were talking about the housing market, which is very spooky. I hope to leave you on a positive note. Inflation is going down in most places in the world, except a couple key places like Turkey where they're afraid of interest rates. And the glimmer of hope is that there are people working on trying to get this down, housing costs down. I don't have really many other positives I can say, except look into alternative ways to do to buy property, alternative ways to engage in ownership and shared responsibility for housing. That's my recommendation. You can look up ic.org to find potential communities near you and look into things like co-housing and co-ops. That's my best piece of advice. But I still don't think capitalism-based housing works out in the long term, and you're always going to have these problems. So thank you all for joining. Stay safe, stay hydrated, pet a cat if you have one available, and I will see you all next week. Bye.